I'm Corey Dutton, I'm a private money lender, and in this video, I'm gonna tell you how to get the best chance of success for getting funding for your deals. So you've got a hard money lender that's willing to give you the majority of the money that you need for your deal, but you're short on cash. You're going to family and friends, people in your network, possible business partners, and you're asking them for money. I am gonna tell you in this video how to get a lower cost of capital from these people and give them a better feeling of security so you have a higher likelihood of actually getting that money from them. So most people, when they go to family members or friends for capital to invest in their real estate deals, they approach them as a possible partner or as a joint venture. Don't do it. And why? Because you're going to be giving away a larger percentage of your final profit to that person if you partner with them or you joint venture. And you're also going to have to deal with the hassle of having a partner. As many of you know, if you've had partners or family and friends get involved with your real estate deal, it can cause you a lot of anguish. Don't do it. What do you do instead? Approach them for a loan. You're going to approach them for what's called a gap loan. And what is a gap loan? A gap loan is the difference between what a hard money lender is willing to give you as a loan towards a property and what you need to close on that property. So for example, let's say I'm a hard money lender. I'm going to give you a loan for 90% of the purchase price. You've got to come up with a 10% down payment and your repairs, right? So you need a gap loan for that 10% down and the repairs. So you're going to go to your family member, your friend, whoever, and you're going to say, hey, make me a loan, and in exchange for that, I'm going to give you a secured interest in this property. I'm going to give you an actual lien on the property. And how does that work? Well, the hard money lender is going to do a loan in a first position on that property, and your gap lender is going to do a loan in a second position on that property behind the hard money lender. That's a secured interest and a lien that actually goes on that property. And why is that better for them? Well, rather than them just wiring you the money and hoping and praying that your deal's gonna work out as it should, they actually get a lien on that property so that if things don't go as planned, they have a secured interest in your deal. So let me give you a real world example. We were gonna give Nicole a hard money loan to buy a fix and flip. She was short by 30 grand for the amount of money she needed to bring into the deal. So she goes to her uncle and she asks her uncle for it. Her uncle checks out the property, he likes what she's doing, he's willing to give her the 30 grand. Well, then rather than do a partnership or a joint venture agreement with her uncle, Nicole structured it as a gap loan where her uncle was gonna give her the 30 grand, and in exchange for that 30 grand, she was gonna give him a flat fee of $28.50 when the house sells, okay? Not only that, but she was gonna sign a promissory note with him and a mortgage document and give him a lien on the property behind our first lien. So we were gonna have a hard money loan in a first position on that property, and her uncle was gonna loan her that 30 grand in a second position behind us on that property in exchange for a flat fee of $28.50. So whether the house sold in 2 months, 3 months, 6 months, the uncle was still guaranteed to get that $28.50, and he was gonna get a lien on the property. Sounds like a great deal to me. Why? Because rather than him just wiring the money into Nicole's account and hoping and praying that the deal was gonna work out, he was gonna make a loan to Nicole, he was gonna get a guaranteed $28.50 no matter what, and he was gonna get a lien on the property. That's the best way to do it. Rather than having to split her final profits with her uncle and deal with the hassle of having him as a partner, she made him a lender and got a gap loan from him instead. But there's one thing that you definitely need to know before you go out and get gap lenders to lend you money. It's licensing requirements. Some states require any lender that is lending on a residential property, whether it's owner occupied or non-owner occupied, whether it's investment or consumer, that some states do require that person to be licensed. So don't go out soliciting money from people to lend on residential property in a state where they may need to be licensed. Why? Because you could expose them to liability and possibly very stiff fines. Because if they get caught lending money without a license, they could face that penalty. And you don't want to put them in that liability. You don't want to put them in a bad position. So make sure you know the licensing requirements for lending money in the state where the property is located before you go out and solicit money from a gap lender. How do you solve that problem though? Lend your money through a licensed broker like us. We can arrange for that gap loan on your behalf when we do a hard money loan on a property, and then you don't have to worry about the licensing requirements because we are already licensed. Well, if you have any questions about how to structure this or how it all works, leave them in the comment section below and we will answer those for you. If you think that someone you know could benefit from watching this video, please share it with them. And thanks for watching.